Vinay Rajani, a technical analyst, is also joining us along with Kunal. Kunal, let's start our conversation. Kunal, Vinay, afternoon to both of you. First of all, on the levels, 18,720 or thereabout is, it appears to be some kind of a resistance. And up till now, Kunal and Vinay, we have witnessed very good signs of buying on dip, which have happened almost for a month now. Do you think buy on dip will emerge now as well, or are there some levels you're watching out for slightly on the lower side? Kunal, why don't you start with your point?
Thank you, Ajay, for that. Good afternoon. So my sense is that this is a very strong bull market which we've seen over the last 2 months. Now, like every phase of the bull market, this is a phase of a pause or a mild correction, profit booking, which is happening on the indices. I would term it as just a break on the very strong uptrend we've seen over the last 2 months. I think we've risen by 11%, 11.5% from the lows of 16,800 on the Nifty. So I think in that aspect, we may probably get into a phase of a pause for the next 1 week or so. But I would still believe that it's a very strong, buy on dips market, and dips I think maybe closer to 18,400. That could be the first important level, and the second and the most important point would be at 18,000 mark. In fact, one of the very interesting observations is Ajay, that when the Nifty has given a golden crossover, where the 50 DMA has crossed about the 200-day moving average, we've managed to clock almost 10% returns higher than the point of golden crossover, which means that 17,800 has been the point of golden crossover. And over the past so many observations over the last decade and more, we've seen that the index has risen by 10% at least in a span of the next 3 to 6 months. So this definitely becomes a buy on dips market and would have a bullish stance.
In fact, just 10 minutes back, if you look at the Nifty intraday very closely, 18,500, that level in the last 10 minutes is providing to be a bit of a support and market. The tick is higher. I wish we could pull up the tick by tick kind of chart as well. Vinay, do you concur with Kunal's view that this decline will also be bought into? Also tell us about the levels you're watching out for on Bank Nifty.
Afternoon. So I also agree with the Kunal because overall trend is still up. If you were to look at the 20 days exponential moving average for both the indices, for Nifty it is not been taken out. The exact level, the 20 days EMA is placed at 18,460. So Nifty is away from this level. And if you were to look at the Bank Nifty's support of 20 days EMA comes out at 43,860. So both these levels, strong support levels, are protected, and in history we saw that this level acted as a strong support, and bullish reversal was seen. So overall trend is still intact, the breadth is still intact. No doubt for last 2 sessions we have been witnessing some profit booking in small cap indices, small cap stocks. But if you were to look at the overall, still more than 65% of the stocks in NSE 500 are trading above the 200 days moving average. So primary trend, intermediate trend is still bullish. It is just a profit booking. We have to review the index view if Nifty breaks 18,460, which is 20 days EMA. If that is breached on the closing basis, then we will definitely review, and our stance will become bearish from the bullish. But till that happens, we are bullish, and still there are many stocks which are giving good opportunity to trade long. Some PSU banks and power stocks are looking very strong and going very strong. So I think there is a conditional scenario. As of now, it doesn't look like that it is a bearish trend. So keeping a stop loss of 18,460 in Nifty, and in Bank Nifty are suggesting a stop loss of 43,850. If these levels are protected, then we can expect a resumption of an uptrend.
To you on those power and PSU stocks, Vinay, but in the meantime, I just want to flag off some more stocks that are in the news today. You've got some of those life insurance companies that are in the spotlight, largely on the back of Macquarie's latest note. They've downgraded HDFC Life, ICICI Pru, as well as SBI Life, all to neutral from an earlier outperform rating, and the target price as well for each of these have been slashed. They believe that unless growth picks up meaningfully within the sector performance is going to lag because near-term catalysts are also missing, and valuation support implies that there will be maybe limited downside. So those are the stocks in the spotlight today. Other than that, HAL in the news, the board is going to meet on the 27th of June and they are going to consider a subdivision. So we'll be watching out for that. And we flagged off at the get-go, SBI, that's under pressure in trade today on the back of the Morgan Stanley downgrade. This is to equal weight from an overweight rating. They're saying that there's limited room for re-rating and they expect the return ratios to have peaked and to moderate by FY25. I wanted to get in a view then on the entire financial space as a whole, Kunal, from you. What's the sense that you're getting when it comes to, that comeback? You've been talking a lot about HDFC Bank, for instance. Do you believe that consolidation is now behind us? SBI at the current levels, is it a prudent time to dip into the counter?
See, I think one thing is very certain, and that's an observation which I have seen for so many bull markets and bull trends, that whenever there is a shakeout, whenever there is a mild correction, there is a churn which happens onto the indices in terms of sectors. Now, for example, over the last 2 months, that there have been two phases of pause or correction. If you remember the day when HDFC Bank, I think, fell by 5%, 6%, that was the day when the Nifty had fallen very sharply. Post that, there was a complete change of trend where the large caps underperformed and mid caps managed to lead significantly ahead. I think in this phase of pause or correction for the indices, we could probably see a similar change for the index, and this time around the large cap names could start participating. So I would be clearly bullish on the likes of SBI, HDFC Bank, even the likes of ICICI Bank and Axis Bank going forward. My sense is that these large cap names should start to get into a zone of a very strong outperformance, and the mid caps might take a bit of a breather.
This is the first downgrade coming on SBI in a very, very long time. So clearly something to watch out for. Before we talk about your trading ideas, Vinay and Kunal, also pull up the pocket, the entire consumption pocket. Pull up HUL, Britannia, ITC, Variety, I'll put even Hero Motocorp in that because it's a rural consumption play. If you watch these stocks very closely, all of them are trading at days low or thereabout on that fear which I was talking about. If El Nino, however pronounced or not so pronounced it is, if rains get impacted, the consumption part, so early in the morning, some fresh shorting at least in the intraday will happen in HUL, ITC, Britannia, all of them. Whether these become a buy candidate on decline is something you will talk about. But Vinay, the stronger ones, ITC, after making a 450, 55, it came back to 440 now. Is it a good buy at these levels?
I would wait because it has reached to the 10 days low and it has run up a lot. As you said, that it has given a fantastic returns to the investor and profit booking may come. So we cannot rule out the running corrections in the overall bullish markets. So this is the same scenario at this point of time. Today is the first day it has breached the last 10 days low, which happens to be around let's say 440 odd level. So 440 is right now it is trading below 440. So I would rather recommend to wait to go long at this point of time because today is the second day of the market is going down and sustainability is there. So FMCG index is also reached at the 10 days low. So overall sector is facing some profit booking and I would suggest that wait for 2-3 days more. It could available at the lower level. I see a strong support around 420, 424 zone. So 2-3% more correction can be expected out of this. So wait for that. Short-term correction could be there, but primary trend is up. So investors should continue to hold on, but traders I think should wait for 2-3% correction on the downside.
Happening in RPG Life, there seemed to be a big move there. We haven't seen that kind of move in that name for a long time. Is it a breakout?
Yeah, it's a very good breakout, Ajay. In fact, the stock has broken 200-day moving average. It's given a price volume confirmation. The volumes today, I was just looking at the volumes over the last so many months. It's almost like a yearly 52-week high in terms of volumes, which we've seen today for the stock. And it's been not a single trade buy for RPG Life, but it's been a consistent buying throughout the day, right from the opening when the stock opens up that 840 mark towards now where the stock is at 940 plus level. So it's a very interesting, very strong breakout. And these are the kind of moves which change the trend and makes the stock come out of a deep consolidation. Like what we've seen for RPG Life over the last 3 months, the stock was into a 80 to 100 point band. I think this move would probably now take the stock to closer to its 52-week highs, possibly in the next 1 month.